Good afternoon, this is Sean Golding with Golding & Golding, here to discuss the basics of OVDP. So OVDP was an offshoot of the traditional voluntary disclosure program. The traditional voluntary disclosure program has been on the books for many years. OVDP was an offshoot that was developed in 2009 when it was called OVDI, and then it was changed to OVDP. The penalties changed over time, and then the program closed in 2018, September 28th, I believe. In March of 2019, the IRS had expanded the traditional voluntary disclosure program. So when you hear people say OVDP ended, it doesn't mean that if you have offshore-related disclosure matters, there's no avenues. It's just the OVDP program per se is no longer technically available. You just submit under the traditional voluntary disclosure program using the guidelines under the new memoranda. Why don't we go through that, some of the basics, to give you an idea? So when OVDP was in place, the traditional voluntary disclosure program was only used for domestic. Now it's used for both, and there's kind of different guidelines depending. So to compare it, under the traditional or the prior OVDP program, it was an 8-year compliance period. FBAR, FATCA, you had to go back and do 8 years worth of compliance. You had to amend or file original tax returns for 8 years. There was a 27.5% penalty on the highest maximum balance unreported aggregate total. So what you would do is you would look at each year, look at the assets that were not reported or the accounts that were not reported, what the maximum value was. You would aggregate those values, multiply it by a 27.5%, 0.275, and receive the penalty. Now, certain assets were not included, certain assets were exempted, but at the end of the day, you would generally come up with that total. That's where your penalty would come. In addition, there was a 20% annual penalty on the tax liability stemming from the unreported income. If you had $50,000 of unreported income, if you were at the 30% net effective tax rate, that would be $15,000, and then 20% penalty would be $3,000, and then there would be interest on top of all of this per year. So when you're going further back in the compliance period, that interest is going to be significantly higher since it compounds. If you didn't agree with this penalty, you would opt out. Opting out, you stay within the OVDP program, but you opt out of the penalty with the hopes of reducing the penalty. We handled several opt-outs, successfully. It was a huge undertaking for the taxpayer, timely and costly, depending on what kind of assets and accounts, the amount of income, foreign businesses, trusts, etc., etc. Under the expanded traditional voluntary disclosure program, which we're just going to refer to as new OVDP, it goes by the Internal Revenue Manual. And what the Internal Revenue Manual and the code more specifically say is that it's a 50% penalty on the highest year's unreported max balance, not 27.5% anymore. Now it's 50, or whatever the code or the manual says, or $100,000, whichever is greater, which essentially means that the floor is going to be $100,000, not the cap. People have tried to argue that based on a prior regulation which conflicts with the statute, etc., that it should be a maximum $100,000 per year or maximum $100,000 in total. That argument has been shot down numerous times, and to date, there's been no appellate court ruling on that issue. When it comes to the annual tax liability, it's not like it was before. It's not 20% per year. It's 175% penalty on the highest year's tax liability for unreported income. An important note, unlike the old OVDP, let's call it, where the compliance period was 8 years, under the new OVDP, the compliance period is only 6 years, which is a benefit, especially the further away you get from the misdeeds. Now, people generally used the old OVDP not only because they were willful. That's a What it is there were some clients who just didn't want to deal with an audit. Under the old OVDP, 99.9% of the time you were not audited, and if there was some type of audit correspondence, it was sort of a paper request. Maybe you'd get an IDR, information document request for, foreign tax liability. If there was significant amount of foreign tax credits, let's say, then the way it works is if it's more than 50,000, I believe, it has to go through exam and it becomes a whole issue. And so, but that's not really an audit the way that most people would consider an audit, like an opt-out or just an everyday audit for business or individual expenses or income would be. So under the new program, the main reason why someone would do it is it's twofold. The first reason is because they cannot certify under penalty of perjury that they are non-willful, which is what's required for most of the alternative programs like streamlined filing compliance procedures, streamlined domestic offshore, streamlined foreign offshore. But there is a kind of silver lining in the new program, which says under the new program, there's no per se penalty for information reporting. So there is the potential where someone may have low FBAR and FATCA assets, maybe not a huge amount of unreported income, and the main culprit for their reporting is informational returns. In that type of situation, a person may be able to get a better deal than they would get under the 5% streamlined or prior OVDP. For the most part, anyone that submits to the updated version of OVDP has to go in with the mindset that they're probably going to get hit with a 50% penalty, at least for FBAR and FATCA, but that doesn't mean you can't get the penalties reduced. You still have the opportunity to try to mitigate it, unlike the old OVDP, without opting out per se. The agents have the authority sometimes to lower the penalty. They probably need a manager or supervisor's approval, but you may be able to avoid the audit, which you're still entitled to under the new OVDP, what would have been an opt-out in the prior OVDP if, depending on the facts and circumstances of the individual, maybe the health, the age, etc., etc. If someone can certify under penalty of perjury that they're non-willful, they have various other avenues available to them. There's the streamlined domestic offshore procedure, streamlined foreign offshore procedures, delinquent international information return submission procedures, delinquent FBAR submission procedures, and there's always a reasonable cause. We have lots of free resources available on our main website, goldinglawyers.com. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.